Hello traders, Cousin Vinny coming to you from theclosingprint.com on Sunday, July 7th, 2019. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher last week, including international indices, London Stock Exchange, the Nikkei, the Hang Seng, and the Bombay. We had leading tech stocks moving higher last week with the exception of Nvidia. Most indicators and macro issues that we follow continue their bullish trend into this week, with institutional sentiment finishing with an up note and bullish. NIMO and NAMO continue their bullish cycle. S&P equal weight index broke through a triple top and is now moving higher. A50R is a bit extreme at 82, but it has a ways to go before it gets above 90. The put-call ratio is showing a bit more calls being bought than puts, but it is at a tepid level and not extreme at this point. And VIX is below its 50-day moving average and moving lower. That said, the US dollar did have a bullish spike last week, finishing off at 96.89. It has a bull cross, so it could move a bit higher. That could put commodities at risk for further downside, as we saw gold moving a bit lower, but still holding the highs nonetheless. Copper had a bullish turn, but it dipped as well, still putting in higher highs and higher lows. And West Texas crude is fighting at the 20-day and neutral. The heat map is mostly neutral. We did see a little bit more yellows show up after being mostly green last week. But individual sectors, if you monitor them, they look like they just pull back in a bullish trend. So most likely they will continue higher. Technology was very strong. It could continue as July is seasonally the strongest month of the year. Last week we saw strength in financials, tech, semiconductors, and consumer discretionary. Towards the end of the video, we'll review some IBD 50 names, stocks that are showing relative strength, breaking above the previous highs of the day on Thursday and Friday. Looking for a follow-through, we'll look at some Market Smith names, as well as some squeeze candidates this week. We highlight those in yellow, and stocks that we've been trading recently. Bukowski is showing 5 of 5 green, moving from 65% to 73%. Bullish with 7 bearish patterns, 19 bullish patterns, and 349 patterns waiting for breakout. Starting week 2 of the second half and the third quarter, we have SPY moving higher, pushing through a triple top zone. RSI is rising. We have a Fibonacci extension 1618. Gives us a target of 309. A measured move of this recent pullback from 294.95 back to a 382 Fibonacci retracement. Gives us about 19 or 20, so that's around 312 to 313. And we have an expected move for the week at $3.42 using Friday's options. That gives us about 302 to 303. We also have volume tapering off a bit, but MACD is back above its signal line, showing that bulls are in control. Looking for follow-through. This chart's more bullish than bearish at the present time. The Nasdaq is showing similar circumstances with RSI rising above 50. It continues to struggle at this 8,000 to 8,100 level. Resistance first appeared back here in September. After the rebound, it ran into resistance just a little bit higher. A third test is still underway. We have a Fibonacci extension of 8,400, a pullback to around the 50% retracement from the December lows up to the recent highs. Gives us about 1,000 points on top of this, so that's about 8,800. And the weekly options give us, for the July 12th expiration, of about 121 points on top of where we are presently. So this chart is more bullish than bearish. Seasonally, this is the strongest month of the year. We're looking for a move If we follow through a minimum to 79.61 using the expected move for the week, or the previous targets using Fibonacci extensions and measured moves on the recent pullback. This chart definitely looks good for a follow through. If we get rejected here, you got the 120 points to the downside, potentially bringing us back to this 76.90 level, 7,700 in the short term. We also have MACD above its signal line, and volume did taper off last week on this retest of the recent highs. If you're trading the Qs, a derivative of the Nasdaq 100, you have an expected move for the week of $2.98, roughly $3. If we do breakout, or $3 to the downside if we don't, pulling us back to around 187 on any pullback, with support at 185.90, 186 just below. IWM, of course, has been the laggard. If this does break out, we have an expected move of $2.40. That gives us a breakout and a test of that 160.54 zone again, with RSI rising. Volume looking pretty strong for this laggard, and MACD back above its signal line. If we do see IWM break higher this week, that would be risk on. That said, the New York Stock Exchange is pushing higher. We do have a number of new highs beating out new lows. Continue to stay above the zero line and bullish, with the moving average climbing. We also see price action moving higher, of course, and the New York Stock Exchange advanced decline and junk bonds in the lower panel, both putting in higher highs and higher lows. The new highs continues to be a good sign as the S&P 500 broke out to new all-time highs. The number of New York Stock Exchange stocks moving above their 200-day moving average hit 63% on Friday. That's the highest mark this year. The current level is neither too many or too few, which is what bulls like to see. In addition, the Wilshire 5000, an even broader measure of market participation, broke out above its triple top, while bullish market advisors are at 55.2%. According to Investors Intelligence, the last time bulls were at 55% was late April to early May, and the market pullback followed. So be a little cautious this week, but we're more bullish than bearish, looking for tech to follow through. Considering the Nasdaq, we do have the McClellan oscillator in a bullish cycle. The black line continues to rise. We're not at extremes like we saw back in early February. We dipped, and the dip was bought in late June. So this has more room to the upside. There's always a possibility that we could flatten out, so we'll be watching for that as well. As we also see on the New York Stock Exchange, with its McClellan oscillator also in a bullish trend, no hint of a turn or a plateau yet, which would indicate slowing breath and slowing momentum as a result. And we have VIX short-term oscillators on the 60-minute time frame green. So if this turns up to start the week, that would be bullish. We want to be buying. If this dips very quickly and we see VIX pop, that would be bearish short-term to start the week. As VIX on the daily did drop below its 50-day moving average, it tested the 12 and 11 handles last week. A follow-through to the downside would be bullish for equities. A bounce and a follow-through to the upside would be short-term bearish to start week 2 of the second half. One important truth I learned a long time ago, that you have to be careful thinking the market is telling you something in isolation. That's why we look at Forex markets, we look at the bond market, we look at commodities, we look at equities, cycles, breadth, etc. When you put all that together, you can formulate a reasonable assumption about what the markets will do, and then you look for confirmation In this particular case, we've got the bond stock ratio moving lower. That's what we want to see. This is showing equities are being favored versus bonds. As a result, last week we told you that we would start scaling out of TLT and AGG. It's at resistance. It's showing signs of rebalancing by institutions with these tall wicks. As price action rises with the moving average just below, we'll look for confirmation this week. It is overbought. RSI is showing muscle. All this is happening, of course, as AGG shows similar action, potentially some rebalancing, possibility for this to pull back to the moving average and bounce. This is still more bullish than bearish, obviously, since late September, October when we first got long. This has just continued to impress, while investment grade corporate bonds continue to move higher. LQD is also something to keep in your chart lists. Keep an eye on it. If this starts to show some selling this week, that would be confirmation that we're starting to see rebalancing by institutions. All of this is happening, of course, while everyone is jumping up and down talking about the 10-year. Looking at TNX, the Treasury yield, you can see PPO is near extremes. Looking for this to turn back up. Previous occasions where we had bullish follow-through after a dip in the markets back in 2016 when TNX took off to the upside, the S&P 500 followed, and we saw a 43% gain. In the meantime, bounced and looking for a follow-through. We have a positive correlation between TNX and the S&P 500. We're near extremes, areas where we've seen reversals in the past. I would assume that that would be the case this time around as well. All of this is happening, of course, as the stock market struggled on Friday on those non-farm payroll numbers, coming in stronger than expected. It's odd that equity bulls would be looking for weak employment numbers to keep the Fed on the side of easing to drop interest rates, but in reality, we really don't need it. We're trading at all-time highs. Employment is good. There's no sign of a change in direction. The magenta colored line is the employment number. We have the 12-week rate of change. The black line has yet to drop below the zero line, so there's really no expectation of recession at the present time. As we can clearly see in the 10-year yield spread, this continues to drop. As long as that's dropping, similar to what we saw back here in 2016, we've had plenty of occasions where this indicator was dropping. Last time it peaked was back in December. It tapered off very quickly. When that happened, that's when we saw the market start to rally. This is continuing to move lower. This is telling you bond traders have no expectation of recession in the near term as this continues to drop. As far as currencies go, there's lots of discussion about weakening our currency, manipulating our currency in the news. When that happens, when the currencies move lower, typically you see the markets move higher. In this case, the British pound, US dollar pair. The London Stock Exchange and the FTSE continue to move higher week over week. This is the daily time frame. The same goes for the Japanese yen, which did break down below its 20-day moving average, with MACD showing momentum is tapering off and bearish, which translates into the Nikkei moving higher, of course. So if you're trading, look for the Nikkei to continue to move higher if the yen moves lower. And finally, the US dollar if you're trading US equities. The dollar did bounce, so that is something of a headwind. If you're bearish on the markets, you want to see this continue to move higher. If you are bullish on US equities, you want to see the dollar find rejection here on this weekly time frame and turn back down. That said, commodities are responding by putting on higher highs and higher lows, turning in June. We see copper very heavily correlated to construction, home builders, and the economy in general. You also have to be concerned if you're trading gold at resistance, getting rejected as the US dollar bolted higher. It takes fewer dollars to trade the same amount of gold, so gold will respond by moving lower, usually. So if you're bullish gold, I know a number of people in the trading room were trading gold last week and the week before. You want to see the dollar moving lower in the short term, which would also help crude oil, West Texas crude, in this case, the weekly chart, paused at the 20-period moving average, produced a bearish engulfing candle. I'm not too concerned about it. I'm thinking that we're going to follow through. There's still a lot of Middle East tensions and supply issues. So if we do see the dollar moving lower, that would help the situation with crude oil. Crude oil is also positively correlated to equities, so you definitely want to see crude oil moving back towards the highs in the short term. The sector heat map, read from left to right, put in a little bit more of yellows and oranges, so that's telling us to be a bit cautious. While international markets are improving, you can see where it was really red back here in May, has gradually improved. Looking for Argentina, Turkey, Greece, and a few other names to continue to move higher. You can also trade VWILX, Victor, Whiskey, India, Lima, X-ray, which is what we do to trade the international markets. That one's been performing very well, while emerging markets also are improving. While most sectors like consumer discretionary, bullish breakout following through, we want to see that continue if you're bullish equities, as some of those sectors showing a little bit more oranges, just showing you that the previous week was higher and we pulled back a little bit, but still in bullish trends. This is healthcare. While financials took a pause last week, XLF in a bullish trend following through. We would see more of a yellowish tint to the heat map as a result. XLC communications sector, you got Disney, Netflix, Fox, Comcast, Facebook, all in this new sector in a bullish trend, looking for higher prices in those individual stocks and the sector itself. While transport showed more orange on the heat map, you can see what we're looking at here. Nearly a pullback to the 20-day, but we're putting in higher highs and higher lows. If you're bullish the markets, you definitely want to see transports moving higher, rails, trucking, and airlines. Look for those stocks to follow through this week if you have them in your portfolio. Here is the IBD 50 list for the week. We're looking for stocks that are not too far away from their 20-day moving average, or stocks that are ready to break out, preferably close to the 20-day moving average as they're doing that, with the 20 above the 50 both rising. We'd like to see volume. Team is an excellent example. RSI is above 50. When it is, you want to respect the trend. The trend is up. Price action came down to the 20-day moving average, tapped it, reversed, produced a bullish candle on an otherwise so-so day on the S&P 500. Look for this to follow through along with the Nasdaq and the Qs. Technology stock, Atlassian, looking for a breakout and a follow-through of the recent trend, similar to what we saw back here in April when it broke out and started trending higher. EPAM, healthcare related software, looking for a follow-through here as well. Tapped the 20-day moving average, about to break out of this triple top. RSI is above 50. Respect the trend. ADX looks good, with ADX green above ADX red. Most of these stocks being highlighted by MarketSmith, of course. All of them near the pivot. Looking ready to break out, like Monster Beverages. Those names are right here. You can pause the video and copy these down. A number of these are on the watch list this week. EPAM being a provider of outsourced IT and lifecycle software development services, design, prototyping, and testing. Relative strength line is climbing. Note annual sales and earnings are increasing. Positive adjustments to its expected annual sales and earnings. Good IBD metrics as well. ESNT, a good example of what we're looking for as price action moves through the 20-day or tests it. We want to see a follow-through. Closes in the upper half of the daily range, taking out the previous highs of the day, previous weekly highs is what we're looking for now, and a breakout. RSI is rising. The trend is somewhat sideways, so we need to see 20-day starting to turn up a bit. ESNT in the private mortgage space, annual sales and earnings increasing. Excellent IBD metrics. Looking for a breakout and a follow-through. Relative strength line is climbing. Just need to see some volume. It has earnings first week of August. Floor and Decor, as its name implies, in the building supplies group. Looking for this pullback to get bought. It could drift a little bit lower. I do like it. Relative strength line is above 50 and rising. Operates a multi-channel specialty retailer of hard surface flooring and related accessories. Annual sales and earnings climbing. Good IBD metrics. Relative strength line needs to turn back up. The 20 and 50 are about to cross. And the company has earnings set for the first week of August. Globant on the IBD 50. This is what we're looking for on these pullbacks to the 20-day moving average. We're looking for confirmation. Buyers stepping up. Closes in the upper half of the daily range, above the previous highs of the day, and just keeps going. RSI above 50. Respect the trend. Innovative Industrial Properties, IIPR, remains above the 20-day. No retests, hanging out at ATR1. Relative strength is above 50, staying very strong. Volume increasing. In the cannabis space, the company operates as a REIT, targeting acquisition of industrial real estate assets that are used in growing medical use cannabis. Company has earnings scheduled for the second week of August. Good annual sales growth. Look at the increase here from 2018, $3. This should translate into a move higher. Good IBD metrics, looking for that to improve as well. Keysight, another good example of the trend intact. RSI above 50, respect the trend. Pullbacks getting bought, following through, closing the upper half of its daily range. You had a nice hanging man candle on Friday, looking for this to follow through or pull back a little bit. So confirmation would be a follow through and a close in the upper half of its daily range, a close near the high of the day on your intraday charts. If you're thinking about a new position and a breakout, we think this is going to break out in the short term. LPLA, bouncing off the lower ATR bands, following through, moving above the 20-day, retesting the 20-day, and then following through Thursday and Friday. RSI is rising for this company that provides brokerage investment advisory services to over 2,500 financial advisors at 800 financial firms. Look at annual sales and earnings from 2017, doubling. Annual sales and earnings look good. All of these things plus relative strength line climbing is telling you that LPLA more than likely is going to continue along its trend of higher highs and higher lows on the daily and weekly time frame. Nice trend. Look at the annual sales and earnings beats for the past 8 quarters. This is done very well. Page Segura looking good. I love how this stock is trending. I'm not interested in trading it this week, but more than likely it's going to continue. At some point it's going to pull back to the moving average like it did last time, then rallied for the entire month of June into July. At some point we'll get another entry on this one perhaps. Looks good on PAGS. I know a number of you are trading this one in the trading room. So I just keep sliding my stop under each successive day. Tighten it up. Make sure you don't give any of this back if it does start to show some weakness. Paycom, same idea here. Last time it pulled back to the moving average, it followed through. Has since been trending higher, RSI above 50. I'd only be interested in day trades on this one showing strength. Otherwise, the next pullback will most likely get bought we'd look to get to an entry at that point for a short-term swing. Same idea with Progressive Corp, following through, breaking out most likely. Push through the 20-day RSI showing strength, volume coming in showing institutions are picking up shares. With earnings at the end of the month, looking for follow through. It's 14% above its pivot breakout zone. So that gives you about another 6% before you start to see sellers come in. With 20% gains, that's typically where IBD investors will be starting to take off positions, looking for a second stage base. In this case, first stage, second stage. PayPal, also a nice setup. If it does follow through, look for a test of the recent highs. ProPetro holding. This one looks like it's ready to spring off the 20-day, pull right back to the 20-day relative strength line, putting in higher highs and higher lows, staying above 50. Volume is looking pretty suspect. Looking for a break and a test of 25 in the short term if we get a bullish follow through on Monday and Tuesday. ServiceNow, another good example of stocks that have pulled back to the 20-day. This is your best entry. On a follow through, you're close to the moving average, you're close to the value area, the 20-day. You're buying up here, you're buying at a premium, so wait for a little pullback. I'd only be interested in a day trade per se at this point. If it does push higher, look for a little bit of a flag. TKR, another candidate for a bounce. Pull back to the 20-day, found buyers. Look for a relative strength line to turn back up on Monday, Tuesday. Twitter in a descending pattern, looking for a follow-through day or two. Preferably we get a full week of follow-through. Relative strength line gets back above 50. Look for this trend to reverse from descending to ascending, and also looking for some volume. Right now I'm just watching Twitter, looking for a follow-through. Ubiquity Networks, think 5G, telecom, looking for this stock to push off of this level. A break above 135 would definitely confirm. Relative strength line is climbing. It looks like it's about to push off the 20-day. After this dip, relative strength improving, following through, volume increasing, everything that you want to see. You just need confirmation now. Closing in the upper half of its daily range. Closing at the high of the day would be even better. For a few days as it breaks out, you could start a position here, use your stop at the low of the day, then just follow with a trailing stop. Viva Systems, this was a new entry, looking for a follow through. On Friday we took some options off the table. We kept half of that position looking for a breakout test. Relative strength line is climbing. Volume is tapering off a little bit as we're starting to climb. Really want to see that reverse and see some big spikes in volume on the next breakout if it does happen. Some stocks that showed up on the TTM squeeze scan. Looking for these to follow through a little bit away from the 20-day, but Bollinger Bands opening up in top and bottom. Looking for a lot of the insurance stocks to continue higher. Cisco, nice little bounce back above the 20-day on Wednesday. Follow through on Friday. Looking for a breakout RSI above 50. With earnings a month away, we could get a test of the recent highs and a breakout. Watch for increasing volume. Relative strength line to climb. Annual sales and earnings continue to move higher. We'd like to see some A's and B's here instead of C's and D's. Other than that, it looks good. Refer back to the XLC sector that I pointed out. Relative strength continues to climb. A lot of those stocks in that sector, Netflix, Comcast, Facebook, Disney, all look bullish. Disney, in particular, I'd like to see a follow through and a breakout. Looks like Dish Networks is about to do the same thing. Relative strength is climbing, volume is increasing. Looking pretty good. Looking for Bollinger Bands to open up and for TTM to trigger in the short term. Hasbro also setting up a TTM squeeze, looking very strong here. About to break out. Look for that to happen in the short term. As volume is starting to come in, sneaky. Relative strength line is above 50 all the while. So respect the trend. Looks like this is going to break out in the short term. Team also talked about earlier, IBD 50 name. Looking for a follow through. TTM squeezing here along with Twilio. Gets above the 20-day, look for it to retest the upper bands. We're really looking for something to happen here on Twilio to get this stock moving again. Some of the stocks from IBD, MarketSmith looking for a follow-through, Autodesk, Amazon looking for a breakout of this big cup and handle pattern, Broadridge Financial Services provides outsourcing solutions for investor communication, securities processing, and securities clearing. Big cup and handle, looking for the breakout above 133. Set your trigger for 133.55. With earnings out first week of August, nice annual sales and earnings and good-looking IBD metrics. Citigroup and a lot of the major banks, JP Morgan, all look good. Look like they're going to follow through and break out. Relative strength line is climbing, looking for increasing volume. Annual sales and earnings increasing. Like to see these metrics improve over the next 2 quarters. Cornerstone, CSOD, looking for a follow-through on this software. Workforce training, communications, performance management. Looking for a follow-through and a breakout of this double top. Joint Corp, JYNT, this one looks like it's going to follow through. Annual sales and earnings going from a net loss to net gains and improving into 2020. Franchisor of 442 chiropractic clinics that operate on a non-insurance cash-based model. Kemper, another insurance name, homeowner and automobile insurance, life insurance, looking for a breakout above 91 with earnings at the end of July. Annual sales and earnings increasing, looking for a follow-through with relative strength line climbing. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on July the 7th, 2019 with your weekend video newsletter. Look for your watch list to come out later tonight around 11:30 on the East Coast, 8:30 on the West Coast. Otherwise, I hope this video helps. Enjoy the rest of your Sunday, and we'll talk to you soon. Take care.